Good morning, everyone. David Paul speaking. You should receive this on Saturday morning, the 26th of September. I'm recording it to meet a deadline on Tuesday, 22nd of September. Certainly today, the trend situation on VectorVest UK, VectorVest USA is in fact an awful lot of red on the front page of VectorVest. I'm going to talk about that very briefly. That's the situation we see on VectorVest UK. We have a lot of red on the colour guard. The short-term trend is down. The underlying trend is defined by the MTI is still slightly up, and we still have a confirmed up in place. And I think that the weakness in the pound sheltering the UK market from an awful lot of the downside in the USA. That's the VVC UK, and as you can see, this canary, the buy-sell ratio divergence that we've been talking about on Monday afternoons, still very strongly in place, with the buy-sell ratio much less than 1. So there's many more companies on a sell than there is in a buy in the London market. This divergence between the price and the buy-sell ratio is the longest divergence between price and breadth that I can remember in nearly 40 years of doing this. So that's not a particularly good situation, folks. And if we look at the DEW, the medium-term measure of the market, we can see that we've had 3 sell signals in a row, and that's currently on a sell after yesterday's close. So not particularly good. If we go to the USA, we can see a great deal of red, and pretty much everything there is down. And I think that number of declines against the number of advances on Monday, one very emphatic looking little chart. So if I put up the charts, we can see that the confirmed call is down. The market is starting to move into an oversold situation, that's for sure, but nevertheless the confirmed call is down, has been down for about a week now. And the DEW similarly down after this what technicians refer to as bearish compound divergence. We have to be very careful with open positions, and the topic of my essay this week is that many people are in the market for the wrong reasons, and they're in the market to prove themselves right, as opposed to being in the market to make some money. They're in the market, unfortunately, at a very deep level, and many people don't know it, including myself, but we're in the market trying to solve a puzzle as opposed to try and make money. So very simply, folks, put the shares that you hold or want to hold into a watch list. Now that watch list, if you don't know how to put them into a watch list, then the Successful Investing Quick Start course will show you how to do that. That's under the training page, or give support a call and they'll show you how to do that. This is a portfolio that I've been holding and following since April, and I'm reasonably pleased with the results in quite a weak market. The default sort is VST. And although the UK market hasn't done anything in the last 3 months, really, this portfolio hasn't done bad at all. But once you own the shares, ladies and gentlemen, then the fundamentals don't matter that much. The only thing that really matters is whether the share is going up or going down. So the next job is simply click on RT, and that'll resort the portfolio by VectorVest proprietary short-term trend detection device known as relative timing, and that brings the shares that are moving up the fastest to the top of the list, and the ones that are in fact moving up the slowest to the bottom of the list. And I've already had to take action on one this morning, a gold stock that disappointed when the gold market fell very hard yesterday. There's another share that I need to take action on, AAZ. The rest of them are okay. They're on buys or holds. One of the best investors that I know, he lives in Johannesburg, and every month he's been using VectorVest US for a very long time, long time before we introduced VectorVest to South Africa, and he looks at his portfolio every month, and he looks resorts by RT, and he simply sells the lowest 2 stocks at the bottom as just a matter of discipline. Not suggesting that you do that, but it is quite a good practice. When you're at the top of your game, folks, you will be, in fact, without hesitation, getting rid of the weak ones. And when you're at the top of your game, you might actually buy more of the ones with a high RT. Now, I'm not suggesting that you do that for a second. I think that at this stage you can just hold on to your winners, then you'll be a mile ahead of the crowd. Most people lose at this game because they get this completely the wrong way around. The shares that are doing well, they can't resist taking a quick profit in those, and the shares that are not doing well, they hold on to for years in the vain hope that the darn things are going to turn around. So tell your ego to take a hike, allow your winners to run, and just cull those losers very quickly. If you can do that, you'll immediately put yourself into the top 5% of all traders and investors in the world. It's that simple. I've outlined a little mental thing that I've used with many traders over the years, very successfully indeed, if you read the essay. So I hope this helped, and I'll see you all next Monday afternoon. That's Monday afternoon at 1:30, the 28th of September.